What's going on, everybody? It is your boy Stas here. Welcome back to another video. So we got to break down the markets in this video, stocks I'm looking at, and of course we got to break down some charts and my thoughts overall on the market. So with that being said, let's get into the video. If you all find value, hit that like button and make sure to subscribe. I think we're about 1 or 2 subscribers from 25,000, and who knows, when you're watching this, we might already be there. But if you haven't subscribed yet, hit that subscribe button. And with that being said, let's dive into it. So take a look. Markets ended up closing very nicely, handsomely in the green today. The Russell went up 1.6%, the Nasdaq up 0.9%. We had the S&P up 1% as the Dow went up 0.8%, and we had the VIX down 4% as we had gold and silver both up around 0.6 to about 0.7%. So very strong day for the markets overall. And if you all watched my video from earlier today, which we went over 4 oversold stocks to buy, make sure to go check that out after this video. We covered how SPY was struggling right around the intraday high. Well, I guess the intraday high when I was filming that video, which at that point it was right around 413. And lo and behold, we ended up ripping out of that point, ran all the way to 416, closed at about 415.75. That's great. And when it comes to triple Q, let's pull that up. This ended up ripping out of the intraday high at that point. We ran up to about 310, 311, closed at about $309.85. So the markets did very well today. And the fact that we ran into the close, bulls finished off strong, that is a very good sign. And now going back to this 20-day chart, and I'll zoom in a bit, you guys can see it. We are still trading in this downwards channel, which I talked about in my previous video. You can see it on triple Q here, and you could also see it on SPY. Now, the question is, are we going to get out of here? Are the bulls going to break, let's say, 417, 418 on SPY to then break us out for the next leg up? Or are we going to end up failing here and maybe falling back down towards the bottom of the channel? Same thing with triple Q. Are we going to fail here, maybe fall back down to 300, 303? Or are we going to break out, go to 313, 315, and then ultimately get out of there for the next leg up? That's kind of what I'm waiting for the rest of this week. And I guarantee you guys, I'm not saying we're going to break out for sure, but in these next 3 trading days, Wednesday, Thursday, Friday, we're going to get more direction in these markets, and it could be as early as tomorrow. Really, it could be as early as tomorrow. We shall see. So very solid day across the board today. Very, very strong day. If you have any money in the markets, well, let's say if you're along the markets, today you did well. Considering all the indexes were up here in the U.S. So let me know your thoughts. Drop me a comment down below, and let's talk a little bit about oil here. Then we'll look at gold and silver very quickly. So oil still under $120 a barrel here. Nothing really changed from my previous video. So if we do break, let's say 120 tomorrow, some point this week, look for that push. Maybe not all the way to 130 this week, but over the next couple of weeks, that's the next gap to fill on oil, right up to about $130. And I've been talking about that for weeks here on the channel, guys, and it's happening now. It's starting to break back out. So crude oil, and I mean, it's been breaking out for about a month at this point. And again, I've been talking about that for a while. So let's look at gold and silver. How are they looking? We haven't looked at their charts in probably a week here on the channel. So gold is still holding an uptrend, which is great, but it is fighting right at these moving averages on the 4-hour chart at about 1850. So I think it's going to be a sticking point right here. But if we start moving, getting buying pressure above 1860 to 1875 towards 1900 an ounce, that is what the bulls need. They need that, right? But if we get selling here back towards the 1800s, low 1800s, that's not going to be good at all for the bulls guys on gold. So for me, I do own some gold. Not a crazy amount. I'm not a gold bug, or I'm not some doomsdayer, but I do own a little bit of gold for diversification, and I'm holding for the long term. At this point, I don't really give a crap what gold does, but when we're looking at this chart, it's at a critical spot, and I think silver is at the same critical spot as well. Yeah, look, it's right by the moving averages, 4-hour chart. We're seeing a bit of resistance there right now. So if silver starts moving $22.50, $23 an ounce, it breaks out of there, that is going to be where we could get that next big move, which with inflation right now, I'm thinking silver and gold have more upside potential than downside risk at this point in time. Call me crazy, but that's what I'm thinking with all this inflation we're seeing and no real signs of it slowing down. And we could just be getting into a recession. I think we're already in a recession, but who knows? It could be the start of a 12-month recession. Or, we might be 6 months in already, but we might have another 6 to 12 months to go. So we might get more downside here in the overall markets, more inflation, but then that could end up helping gold and silver because we all know they are the historical here. Looking back a long time, they are the safe haven of choice during markets, during recessions, during periods where, there's a bit of uncertainty and so forth. It's not Bitcoin. It's not crypto, guys. Look at those returns. It's gold. I'm just being honest. It's silver. I'm not saying Bitcoin and crypto. I'm not saying it's garbage. Bitcoin, it's more of a tech stock. It's more like a tech stock, rather. It's more correlated to the stock market, right? And it's down a lot recently, whereas the precious metals, yeah, they are down a little bit recently in the past couple of months, but overall, in the grand scheme of things, they've been way flatter. I mean, look at silver. I think gold's a better representation. Yeah, look, gold's been flat over the past year, pretty much, which is good considering year to date the stock market's down a lot, and in the past year the stock market or the NASDAQ is down a ton, and same with Bitcoin, right? It makes sense. So what do you think about that? Drop me some comments, and I'm not hating on Bitcoin. I'm not some, again, I'm not a gold bug and I'm not a crypto crazy maniac either. I'm kind of in the middle here, guys. I'm just trying to be as unbiased as possible. And I don't even have a bias when it comes to gold and Bitcoin, to be honest. I'm kind of in the middle. I say, why not just own both? So let me know your thoughts in the comments as always. And with that being said, did you not see GameStop today? Holy freaking crap. GameStop ended up having one of those rallies up 14%. But before we talk about it, make sure to get your free money for Moomoo if you haven't done so already. You get up to 5 stocks, each up to $2,500 with a $100 deposit. Go down below or go to StockSurfest.com/Moomoo. Deposit again at least $100 and you get up to 5 stocks, each up to $2,500. And if you want 6 more stocks, you're in luck. You can get 6 more stocks from Webull using my link down below, StockSurfest.com/Webull, and depositing any amount of money. And with that being said, enjoy your free stocks. It also helps out the channel. I appreciate you guys as always. And let's get back into it here, talking about GameStop, which today, like I said, went up 14%. It had one of those days where it just saw a massive rally, and it looks like it is in full breakout mode, guys. Look at this. The ascending triangle we talked about. I think I mentioned this, no joke, on Patreon this morning. We were talking about it, which you can join the Patreon. Shameless plug. That's also linked down below. We talked about the ascending triangle. It broke out now, broke out of 138, and we just hit a fresh high on this 20-day chart, but not quite yet on the 4-hour, guys. Obviously, we're still well under the highs on this chart, but if I zoom in a bit, we're breaking out with the next main resistance being about 155, which was resistance beginning towards the middle of April. And if 155 breaks, which I'll set an alert at right now, the next main spot, no joke, the next gap to fill would be anywhere from 190 to about 200, which don't think that is too unrealistic because it could happen. I'm telling you, it could happen. And I think you guys at this point, you know that GameStop and the meme stocks, because AMC, went up, today as well. The meme stocks in general, they move very aggressively at random times. So keep your eyes on GameStop. AMC is another one. This one up 9.4% on the day today. Not as much as GameStop, but still very strong day for AMC. And look where it closed, right under roughly $13. It actually closed above $13, but right around $13.50 to about $14 is it's going to be a sticking point for this stock. Not only is it the 180 SMA resistance on the 4-hour chart here, but $13-14 has been a sticking point for over a month for AMC, right? We did run up to about 16 on a one-off run-up, but for the most part, other than that, AMC has been struggling here. So for me to even consider playing it we honestly have to break above 14, which a dollar for this stock to move a dollar, that's not too crazy in a day. I mean, look, it did it today. Who's to say it doesn't go from 13 to 14 tomorrow and then to $17 or something like that? It's definitely possible. So for that reason, Mark is at or above $14. Boom, we break out of there. There could be some upside, guys, so keep your eyes on AMC. And we had earnings earlier today, not GameStop. My mind's stuck on GameStop, guys. That might mean we might have a big rally in store maybe tomorrow for GameStop. Who the heck knows? Probably not, but let's see. The next stock here is Dave & Buster's. Dave & Buster's, that's what it's called. Ticker symbol PLAY. They reported earnings this morning, and let's dive a little bit into that. They did EPS of $1.35 versus $1.16 estimated. Revenue of $451.1 million versus $440.84 million estimated. So they had a nice double beat there. EPS came in way hotter than expected, which is nice. Revenue beat by about $11 million. And what I'm noticing here right off the bat on the chart is an inverse head and shoulders, guys. Look at that. We have the left shoulder, we have the head right there, boom, we have the right shoulder right here. That is a clear-cut inverse head and shoulders, and if this plays out, we're going to end up potentially, if it's a perfect world and it plays out beautifully, there might be upside here towards, let's say, $45-50 a share. That is where the right shoulder could end up completing again in a perfect world, which that might not happen. Who the heck knows? But at this point, pretty nice earnings report. I'm not sure if we got anything on guidance. I wasn't necessarily seeing anything on guidance when I was looking at this earlier. Maybe I'm wrong. I'm still not seeing anything on guidance. So I'm going to set my alert at $40 a share. And look at this. The 180 SMA resistance is at about 42. But today's high roughly was at $40. So if we end up going back to 40, whether it's tomorrow, the next day, maybe the next day after that, I don't know. But if we start going towards 40 again, we take that high out from when they reported earnings, which was the pre-market high, there might be more upside from that point. But I'm not too eager to jump into this. I'm not getting too excited until we get more buying pressure towards 40 and preferably above $40 a share. At that point, again, we might be going towards the mid-high 40s. Let's see, guys. So play Dave & Buster's. It looks pretty solid right now. Cracker Barrel on the flip side, CRBL, and mind you, I've never even personally been to Cracker Barrel, but I've seen it. I've seen it around town. CBRL, let's see here. And personally, I don't know. It's just never enticed me. Have you guys been to Cracker Barrel? Maybe it's great. I don't know. Let me know in the comments. But they did not do so well for earnings for the past quarter. They ended up missing on both counts. It's not a criminal trial here, guys, but Cracker Barrel, they ended up missing on, I don't even know what I'm saying right now, adjusted EPS of $1.29 versus $1.35 estimated, so they missed EPS. And they missed on revenue, $790.2 million versus $795.52 million. So they double missed. It's not the end of the world. It's not like they missed by $100 million on revenue or the EPS was horrible. I mean, they double missed. But the stock did end up going down. I mean, it went down almost 6% on the day. The stock was at $100 roughly. Actually, about $102 to start the day off. And now it's at $96. It closed at about $96 a share. It's under the moving averages. We have a death cross, the downtrend's continuing, and by the looks of it, it's a falling knife, and this might end up going down to test or even take the $90 low out from the month of May. So Cracker Barrel investors out there, I've never met a single person that owns that stock, but if you're out there, let me know your thoughts in the comments. I hope this goes well for you, but for me, I'm staying away from this stock. I mean, it might be a good opportunity. Who knows? I might have to dive deeper into it, to be honest. But for me, on face value right now, I rather just put my money, or I rather just keep investing, let's put it that way, in stocks that I'm already investing in, that I have a big conviction in, right? So yeah, if you're out there, Cracker Barrel investors, let me know your thoughts in the comments. And the next one here is Vici Properties. Holy crap. Look at this. Vici Properties ran like a maniac last week. And the past 2 weeks, it went from $28 to now it's at $32, but it was at $34. It ran up 18%. in just 2 weeks. And if you guys have been following my YouTube channel here, which if you haven't, make sure to subscribe. What the heck are you doing? We were talking about, well, I was telling you guys months ago at the beginning of this year that I started a real estate investment trust portfolio, which consisted initially of just Vici properties and Realty Income, which I mentioned that months ago. And then I ended up adding Stag, which is STAG, another real estate investment trust. We're not going to get too deep into that one in this video. And what else did I add? There was one more. I always forget the other one. And this goes to show I don't really look at my long-term portfolio all the time because I forget the names of these things. Stag, Vici properties, Realty Income, and there's one more. Crap, what's it called? Let me go look. Well, I'm actually looking here. I only own 3 real estate investment trusts. That's my fault, guys. For some reason, I thought I owned 4. I never owned 4. It's been 3 this whole time. So it's Stag, Realty Income, and Vici properties. And again, these are, ones that I've been holding for the whole year. I bought Vici and Realty Income in January, and I added more, throughout the beginning of the year. And then I added Stag, I think in February, maybe into March, probably more in February. But overall, this portfolio, the real estate investment trust portfolio, what I'm trying to get at here is it's been doing pretty well for me. These companies or, these REITs spit nice dividends off. Realty Income is every month. Vici Properties is every quarter. Same with Stag. I think Vici pays a 5% dividend. Stag maybe a little bit less than that. Realty Income probably around 5%, something like that. And the prices of these things, well, Stag's been going down a little bit, but Realty Income has been relatively flat from where my average cost is. I think my average cost on this is probably around 67, maybe $66, maybe a little bit more, a little less. Again, I don't check my long term every day, I forget, but it's right around there. I could tell you that for sure. And I've been getting dividends, and it's been pretty flat. The stock's price is, 68, or the REIT's at $68 right now. And sometimes flat is good because the markets this year are down a crap ton, and Realty Income's flat, and it's paying a dividend. That means that portfolio is beating the markets, right? That is a beautiful thing. And going back to Vici, even as a short-term trade, this looks very good. It's breaking out. We're above the moving averages. We did get very hot at $34, but don't worry, guys, because now we're at $32. We've pulled back a little bit. We're getting closer to these moving averages, and if I were to buy this as a swing trade, which I might do, or I might even just add more to my position, quite honestly, guys, because my Vici average cost right now is $28.75. I forgot to mention that. Vici, I'm in at $28.75 roughly, which right now I'm up about 10% just on price appreciation without including the good old dividends, guys. So if this comes down to the moving averages, $29, $30, I'd be willing to add more to my position, or maybe buy it in my trading account as a short-term swing trade, because overall I'm still bullish on this in the short term. Same with Realty Income and Stag, but Stag's chart doesn't look that great, I'll be honest. Stag looks like it might be coming down a little bit more, but who cares? I'm looking at all these from years out anyway, and I'm reinvesting all these dividends. And one day I plan on, maybe taking some income from this portfolio that I've created. Why not? Isn't that the point of investing, guys, for the long term? To make some money, right? And to potentially live off of that money. Isn't that the goal here? So that is Stag, Vici, Realty Income. A quick little update on those. Amazon is another one that I'm looking at today, which surprisingly, I'm not too surprised, to be honest. Nothing really surprises me much anymore in these markets, but Amazon did not participate in the rally today. Again, S&P up 1%, Russell 1.5, NASDAQ up 0.9. Amazon did not participate. In fact, it went down on the day, 1.43%. And until this makes a solidified move above this 180 moving average on the 4-hour chart, I'm not really interested in Amazon quite yet. So for now, I'm going to keep my alert, or set an alert, at 125. Let's see what it does. Does it move to 135 next, which is a big resistance? Does it break 135? That is what I'm watching here in the short term on Amazon. And last but not least, the last stock for this video. I appreciate all of you guys for sticking till the end. Let me know if you did in the comments. Smash that like button if you haven't done so already. Again, I appreciate you guys. It is CRM, the last stock, Salesforce, which today went up 2.3%. It closed at $187. And as long as this is above the moving averages and we're, about to get a golden cross as well, this is one that I'm watching heavily. And look, with today's green day, we broke out of that 185 double top resistance from a couple of weeks ago. You guys can see it here. Let me show you. There we go. Boom. We got hit once at 185. And then twice, double top. You guys see that? And then we ended up selling off aggressively. So the fact that we're getting, this might be a cup and handle, right? We're getting some breakout action above 185 is a good sign. Now let's see if this continues to 190, maybe even higher. That is where I think the real momentum could kick in. So I'm going to set my alert right now at $190. Mark is at or above, and we'll see what this ends up doing from there in the short term. And with that being said, that's it for this video. I appreciate you guys for watching. Don't forget to get your 5 stocks from Moomoo and your 6 stocks from Webull, link down below. And if you guys want to sign up for Seeking Alpha's premium plan, they're the newest sponsor of the channel. Check out that link down below or go to StockSurfest.com/Seeking Alpha. You get $40 off the premium plan. I'll catch you guys in the next video. Thanks for all the support as always. Peace out.